with your
Thank you
thoughts
very
this
much.
morning. Okay, so broad growth in markets with many sectors leading, that's the key message. Well, the markets at this point in time are once again up and about. So the early morning soft start has been used to actually pile up on stocks. Bajaj Auto is leading the way, followed very closely by HDFC. HDFC had a slightly low day yesterday, and today people are covering in a hurry. Let's get back to earnings analysis. Max Healthcare is the stock on focus. It posted a good quarterly performance. Very good, actually. Operating EBITDA is their highest ever in Q4. Margins have expanded hugely, aided by non-COVID cases coming in. To discuss the earnings as well as the current hospital occupancy picture, we are joined by Abhay Soi, the chairman and managing director of Max Healthcare. Abhay, good morning, and thank you very much indeed for joining us. Well, actually, this is an excellent margin performance at a difficult time. You're able to inch up in terms of margins and EBITDA. Are people now bold enough to do elective surgeries? Is non-COVID cases coming in well in April and May as well?
In April and May, of course, Delhi NCR particularly has been massively hit by COVID. And usually COVID, when you have a wave like this, it's sort of characterized by a few things. One is there is absolute reduction or, non-COVID work goes down to minimum levels. Okay. But having said that, the occupancy on the COVID side sort of goes to abnormally high levels. So, that sort of compensates, compensates for the other from our fiscal.
Okay. But you all could make money. I mean, COVID cases not the same way that you can make money in a non-COVID case. So would this quarter be depressed in terms of margins or tough in terms of margins? Q1, I mean.
No, I don't really see that happening. I think, like I said, you have a high amount of occupancy which sort of offsets the lower ARPOB from non-COVID. This is what we saw in even Q3. In Q3 we had high amount of COVID. In Q4 we had very low amount of COVID. And if you see the margins between the two, we had a 23.1% margin or 23.2% margin in Q3, whilst Q4 was 24.1%. So it was marginally higher. Having said that, so if you actually see the occupancy of Q3 was 76%, whilst it had come down in Q4 to about 70%. So, your history over the last few quarters sort of frames it up and characterizes what's going to sort of, you can extrapolate what's going to happen in this quarter and beyond, perhaps.
Okay. Mr. Soi, good morning. First up, I just wanted to thank you and your entire team for the relentless efforts that you all are taking in order to, combat this COVID situation. Hope we see an end to it soon. But I just wanted to get back. You told us about the occupancies. What does all of this mean for margins for the business? Because in Q4, your margins were at about 24%. You had a cost saving of almost 100 crores in FY21, so that perhaps aided margins as well. Is this a sustainable level, or do you think that there could be some pressure on margins as we move along?
So I don't really see a pressure on margins, so to say, because I think international business, even by Q4, had only come back to 60% of its pre-pandemic levels. OPDs, again, were not entirely back to pre-pandemic levels. And Q4, again, had 10 to 15% of the business was still COVID, which was low ARPOB. We've also seen a huge amount of proliferation of insurance policies being sold to customers and new customers coming to the fray. And that's a segment which is growing rapidly, and it's a high margin, high contribution segment for us as well. So, I think as you see revenue sort of move up, you're going to see margins. Perhaps you have an opportunity for it to gap up even further from here.
Okay, that's good. An opportunity to grow further from here on the margins. I wanted to talk a little bit about your home care package for COVID patients that you had launched last year. And this time around, I understand that the home care business has gone up 24% quarter on quarter. Can you tell us what, the volume growth has been in the last, say, 2 quarters? And what is the expectation? How much could it contribute overall?
So, it's about a 80-odd crore business for us. The home care has been growing at a very rapid pace. In fact, even pre-pandemic over the last 4 years. We see a huge amount of potential in this. As you're aware, globally, the demand for home care is very large. In India, it's not covered by insurance. But having said that, during the pandemic, I think people saw the need for it and saw the advantages of it, of being treated at home. As well. So it gave us a major fillip during COVID, and I think it sort of opened up that market a lot more than perhaps what it has in the past. Awareness of home care clearly across major metros has gone up significantly during this period. So once you've been treated, and home care business is something, if a member of the family is treated, the rest of the family members are also privy to the sort of treatment, care, quality, and so on and so forth. And, this is just, it's going to mar well for the sector, not only for Max Home Care, but I think the home care by itself, you perhaps see a rapid increase in this going forward.
Okay, let's talk finances and capex, Abhay. The government and the Reserve Bank are opening up the purse, giving various kinds of SOPs for investments in hospitals, not just oxygen-related equipment, but even other kinds. The Reserve Bank schemes were very clearly attractive enough for banks to chase you guys. So just give us an idea of the immediate term. Will it mean that finance costs for you will fall for the current year? Will that be a layer for your margins? And secondly, in the longer term, does this spur more investments on your part? My sense is private equity, trusts, everyone will be willing to invest in guys like you.
Look, I think 2 or 3 things over here. One is, I think we are still awaiting clarity as far as, the COVID package is concerned from RBI and how the banks are going to come through on this. But it seems that it is going to be, perhaps subsidized loans up till 2022 and 23. Which sort of allows you to do medium-term investments, but for long-term investments, typically a hospital play is like a infrastructure play. You require loans for 10 to 15 years. Having said that, I don't, my belief has always been that there is more than adequate capital available for investment within the healthcare sector, and so is there an opportunity in India across the board, whether it is urban cities, tier 2 cities, tier 3 cities, and so on and so forth. So far, a lot of the capital has been going towards funding companies for consolidation, and less so towards creating more healthcare infrastructure, and that is what is the need of the hour. And I think when it comes to creating healthcare infrastructure, the bottleneck necessarily is not capital. I think the bottleneck is perhaps single window clearances. Every state, every city, every town has its own bylaws. And, you can imagine constructing hospitals. These are huge pieces of infrastructure. These are things which are done by perhaps, even local developers in places in small cities and towns find it challenging to build over there, let alone corporate sector, let alone hospitals. So I think that is what perhaps needs to be sort of sorted out. Have single window clearances, have standard regulations for building hospitals and healthcare infrastructure in cities. I think that is what is required, perhaps not capital so much.
Actually, we don't really realize ease of doing business can be such a growth multiplier. You don't even need to put money, you just have to cut the red tape. That's something which we are waiting to happen. Abhay, I don't know if this Antara Senior Living is also a part of the listed Max entity. If it is not that an important area of growth, providing old age shelters with more and more children probably living abroad and wanting good care for their aged parents? Is that a vertical you look like developing?
So it's not a part of Max Healthcare. It's a part of the erstwhile Max Group, Andara, which was Max India Limited. But yes, the opportunity is there, of course, for Andara or anybody else who was to be in this business. But yes, it's not a part of our company.
Okay. A lot of, businesses are looking to scale up their diagnostics vertical. I want to understand from you what the opportunity is for you. And how much investments would you be looking at to pump into the diagnostic business, and what could the growth look like?
It's already a 100+ crore business for us. And when I say 100+ crore business, I mean third-party retail business that we are doing. We are amongst the top 3 largest or 4 largest players in diagnostics in the National Capital Region. This business has been growing at a very, very fast pace. And as you're aware, after a certain point, you don't really necessarily require investment within the business because cash flows are more than adequate. Perhaps investments will be required for bolt-on transactions and building this business out through inorganic growth. We have decided about a year and a half ago to focus more on this business to build it out, and therefore we decided to move this vertical into a separate subsidiary altogether. So it gets the right focus to build this out. I think again the opportunity is huge. It's a massively underpenetrated market in Delhi NCR, North India, the rest of the country as well. But our journey is going to be from Delhi NCR, where obviously we are a strong brand. We have hospitals, across the city. We've got the home care practice, what we were speaking about previously. So, and we've got 11 to 12,000 GPs, which refer business to us and work with us, for a lot more serious clinical programs, etc. So I think we don't find entry barriers for ourselves in this. I think there's a great opportunity for Max to focus and build this business out going forward, which we intend to do.
Okay. Well, a quick one word. Net debt already down to 544 crore. Any plans to bring it down further?
Well, last quarter itself, we generated 140+ crores of free cash flows. After our capex and our interest cost has come down dramatically. Going forward, we should be generating close to free cash flows of anything between 175 to 200 crores a quarter. In the absence of an acquisition opportunity, I think we will be using this to pay down debt.
You're forcing me to ask you the next questions. What's on your radar?
Well, we're always in conversations. There is always a pipeline. Lots of things in the radar, but nothing, fructified to a level where we can. We should hear before 2021 ends. Well, if there's anything in our background and DNA, we're very, very comfortable with inorganic growth and acquisitions. And, if God willing, we should have something.
Okay, all the very best to you. It's always good when hospitals come into such professional care as you all render. Thank you very much indeed, Abhay Soi, and all the very best. Let's hope this is a far more pleasant year.
Thank you so much.
Okay, we have to take a break, and thereafter we're going to get to what we always do on the first of the month, auto sales. Rakesh Sharma, Executive Director of Bajaj Auto, will join in to discuss the May sales numbers, one of those few two-wheelers which has posted very good May sales. They're coming back in a minute.